We are live, and today is June 14th, 2022. This is the weekly When Soon show with our founder Cal of all things LeoFinance, Cub, Polycub, all the other Leo apps. This might be kind of a special show though. So if you're listening to this in the future, then just be aware that we've had a major market meltdown in crypto generally, stocks as well, over the past 3 days, something like that. And a lot of people are wondering what is going on. So before we get to the more macro stuff, specifically with Polycub and Cub DeFi, this is one of those times when it's nice that it's not so correlated to the major market cryptos, because we've been sitting at bouncing around like 15, 18, 20 cents on Polycub for the past while, and it hasn't really negatively moved with the rest of the market. It's the flip side of not moving positively with the rest of the market too, but sometimes it works out. So so what is your take on overall Cub and Polycub correlation?
I think Addicted called it pretty well. He actually posted in Discord probably like a week or two ago and said he thinks Cub BUSD is a better investment than Bitcoin. And in hindsight, he's obviously right, because at the time I think Bitcoin was like 30K and Cub was like 4.2 or something cents. And I think in percentage terms, Cub outperformed Bitcoin. I haven't checked on that, but and then obviously with the 60% APR, it's pretty nice. So yeah, I think what happened was, it kind of stepping back to the global outlook and mixing it in with the Cub Polycub Leo outlook. I feel like we kind of front ran the basically like the liquidity crisis, the risk off crisis, as in, Polycub and Cub basically had like a two-day crash to basically the crisis levels, and the rest of the market just kind of had a little bit of a more strung out crash. But in relative terms, everything's kind of at the same point now. So I don't know. I think at the market caps that we're seeing for Leo, Cub, and Polycub, it's pretty crazy to see them this low. And I don't know. It's hard to imagine them going much lower than where they're at. Where like Leo's market cap is, what is Leo's market cap right now? Leo Dex 628,000 is Leo's market cap, which is absolutely crazy. So just consider like the technology. That's the fun part, I guess, about the bear market, is if you look at things like technology fundamentals over the price of the asset, and then kind of overlay that to the market cap, I think you can make some really interesting moves. So I'm kind of doing that with a lot of stuff. Leo, Cub, Polycub, and then going broader, looking at, the market cap of Rune, of Bitcoin, and just kind of being like, is this really worth 600,000 or is it worth more than 600,000? And obviously, in my opinion, it's worth more than that. I think our investment in technology is worth a lot more than even the market cap of Leo. So to me, that's kind of a leading indicator of us being at kind of bleeding lows. Obviously, with that said, the market can stay irrational longer than you can stay solid. So you can't just take that as
favorite line.
Yeah, you can't take that as meaning that it can't go any lower, but I think you can take it as meaning that if you buy it at a market cap that you think is cheap, then in the long run you'll win. So look to people like Warren Buffett for advice on that. Buy things when they're cheaply priced. So he made his entire career by looking at the what he considered the real value of a company based on, cash flows and business operations, and used that as an indicator of this company's worth X amount of dollars, and I'm willing to pay Y amount of dollars to buy it. And that's kind of how he built his fortune.
Yeah, it's interesting. So I've studied Buffett a bit over the years, especially more back when I was doing stock trading. And so he comes from the value investing school, which was kind of pioneered by Ben Graham. And Ben Graham made his fortune by buying stocks in the Great Depression back 100 years ago now. And the thing about value investing that when Buffett learned it from Graham was that the approach was buy okay companies at rock bottom prices, and that worked really well. And then Buffett hooked up with Charlie Munger, and Munger kind of evolved the philosophy to instead of just buying basically random companies at cheap prices, buy great companies at decent prices. And when the market turns around, then those great companies will end up outperforming everything else, in alpha, and so your multiplier on gains goes up. So it's and the same kind of lessons apply to crypto, I think. Is are cheap valuations now? Well, first, one, identify cheap valuations, and two, identify cheap valuations of things that you think long term have huge potential. So Rune has gotten slaughtered over the last few weeks, and but it's still the only true native asset DEX. And I'm not aware of anything that's even close on the horizon. So I'm still a fan. They just need some market adoption in order to generate volume and increase the staking requirements on Rune to support that price. But is LeoFinance Marco was asking, will bear market bring us Project Blank sooner? And Cal's saying yes in the Discord chat. So are these things going to be great performers when the bull market returns? That's really the question.
Yeah, I'm a fan of the All In podcast. I don't know if you guys listen to that. It's got basically four of maybe some of the biggest VCs, and like Chamath Palihapitiya, Jason Calacanis, a lot of people that were basically VCs behind things like Uber and some of these like DoorDash, massive companies. And one thing that they've basically been calling for a recession for like the past 3 or 4 months on their podcast, and actually maybe even longer than that. And one thing that their day job is to advise startup founders, and they basically sit on the boards of all these startups and tell them how to build a better business, and obviously their goal is to get them to the finish line of selling to a bigger corporation and cashing in, or maybe even doing an IPO. And basically for the last 4 months or so, they've been saying that their advice to founders has been to lean up the company, find out where you're spending frivolously, and then they say sharpen your pencils, as in find the ways you're wasting money, and then basically look at your runway as a startup and say, we have this much cash in the bank and we're burning through $1 million a month, and that gives us 24 months of runway. And they basically have been saying for the past several months, make sure that you have enough runway to make it through the next 2 to 4 years, essentially, which is if we are going to enter a recession, which is what they were saying back then and kind of confirmed now, you need to have the runway to get through that recession and get to the other side, because that's where the gains are going to be made at the end of the day. So, I took that pretty seriously when I was listening to the podcast, because for the last, I'd say 8 to 12 months, I've actually really been convinced that we were going to enter a time like this. And it turned out to be right. So I've taken a lot of my capital and moved it to fiat and stable coins, you know, out of Bitcoin. I even took some out of Rune when it was above $10, which I didn't think I would do, but I ended up doing. And just kind of migrated. I mean, we talked about that on the podcast. My percentage of my portfolio that was in stable coins just kept going up and up and up. And essentially what I was looking at is the runway for LeoFinance, because I mean, it's not cheap to have, you know, 20 developers and you know, all sorts of people working on the project, and you know, paying payroll and you know, server costs, and just essentially what I looked at was how much we burned through every month. And I also looked at, in a bear market, in the last bear market, I learned that when shit hits the fan, that's when developers kind of come out of the woodwork and they are excited to do work, which is the opposite of a bull market where you have to beg them to work on the project, pay them top dollar. So we've kind of entered a time now, which has reminded me of the last bear market, where developers are actually, where, like, you know, 3 months ago, I was messaging every developer I knew and people that knew developers and saying, I need developers, I need developers, I need developers. And now I'm the one getting the messages saying, hey, do you still have any work left on your project to do? I'm like, oh yeah, I got a couple things you can do. So I, you know, kind of erred on the side of caution and said this could happen, and kind of stacked up for our, you know, the LeoFinance runway, and not just based on what we were spending before, but kind of based on if the bear market happened and we could onboard like 20, 30 more developers, could I have enough runway to hire all those developers and keep them on for 2 years and build stuff like Project Blank and you know, Leo Mobile and the Leo UI and Polycub and Cub and all the stuff that we want to build. So that's kind of where my focus has been for the last, you know, I would say for the last like 4 months, intensely focused on that runway and kind of determining how long we could keep this going. Because I think what's going to happen now, and you're going to see this in projects like Rune, because I was kind of watching what they were doing with their Thorchain treasury, and I think they're doing the same thing, which is like leaning up, you know, getting some assets that are you know, diversified and uncorrelated, you know, some stable coins, some Bitcoin, and I think what you're going to see now is that we're going to reach like these bleeding market caps on a lot of these projects. You know, for Leo, it might be $600,000 market cap. For Thorchain, you know, could be 10 million, 100 million. I don't see it going to 10 million, but you know, you see these bleeding market caps, and then essentially, if you're looking at what they're doing in terms of like runway and how they planned for the bear market and how they're building in the developments, then I think when you start legging into those and dollar cost averaging into those at these lows, that's when you'll make the killing at the end in the next bull cycle. And I know that worked for me in the last bear bull cycle. So it's I think this is kind of the most exciting time to be in crypto. I know everyone loves when the money's flowing, but this is like this is where we actually work hard. The bull cycle is when we cash in and go sit on our yachts for a year.
Yeah, hang out on Leo Island.
Yeah. Next cycle we might get Leo Island. That's for sure.
Okay. You know, the you know, having the staying power is kind of critical to the whole thing. So I mean, how much runway would you say LeoFinance has?
That's a good question. I would say at the current size of the team, probably it's kind of like at the current size of the team, I would say probably 5 years or more. Yeah. And that is because, like I said, I planned for hiring new devs during the bear market. So, you know, having a runway of 2 years, I think, is plenty. So the way I see it, we can double our budget and still have, you know, well over 2 years of runway.
That's good to hear.
Yeah.
Are you is any of that stable coin in farms, or is it just sitting in stables?
There's a percentage in stable coins, Bitcoin, you know, even fiat investments, because obviously when it comes to things like payroll, that, you know, a lot of that comes from, you know, my pocket and what I invest in. But then, you know, you've got with stable coins, there's some in farms. Obviously, when the whole Terra thing happened, I kind of I think I got spooked a little bit like everyone else did and said, you know what, I've got too much in this stable coin, I've got too little in this other one, and I need to spread it out and diversify it. So, you know, the good timing of HBD is really incredible, because I had a big chunk in a platform called Orion, and I ended up taking that chunk and moving it into HBD, and then wrapping it to PHBD, which turned out to be like 2 weeks ahead of the whole Terra collapse. So so yeah, I think the whole stablecoin thing kind of showed us that you got to have a diversified set of stablecoins, plus you know, maybe not keep it all in one farm on one platform, you know, have it on a couple different platforms, which is kind of a cool segue into like Cub Polycub and what we've done there, where, you know, in the bull cycles, Cub and Polycub are super fun because, you know, price go up, number go up, you're making 1,000% APR. The better part of them, I think, is in a bear cycle, being able to stake your crypto and earn, you know, even 5% or 10% or 20% on it is going to be critical. I think, and we talked about this in the pregame of the show, but Steam really was what saved me and my portfolio in the last bear cycle, where I essentially saw my whole portfolio crumble. I was very heavily into altcoins like BAT and you know, a bunch of other ones. And you know, we kind of saw the collapse of the whole altcoin market. And what I did was kind of, you know, to use their terminology, I sharpened my pencils, and I looked at, you know, what I could earn on Steam, and basically the ways I could leverage it to earn a bunch of Steam, so that if we did see another bull cycle, because at the time it felt like, you know, crypto may never go back up, then I would have this huge stack of Steam, and it would, you know, perform with the rest of the market. And, you know, essentially by earning something, you're dollar cost averaging at $0 on that investment. So the way I looked at Steam, I think, is what saved me and you know, my entire portfolio in the last bear cycle to the bull cycle. And I'm kind of looking at it with the same lens today, and I'm a lot more excited because back then we just had Steam, and we were able to say, okay, I can make some posts, I can earn some Steam, I can, you know, curate, earn more Steam, and kind of compound my interest on it. And now you look at it, and we've got Hive, we've got Leo, which you can do the same things on. You can, you know, create content and share content, curate content, stack, compound your earnings, in kind of that social aspect. But now you also have like Cub and Polycub, where you can basically do the exact same thing, but instead of using your time and your knowledge and you know, your authorship and curation, you're using your capital, and you're using, you know, smart financial moves to basically do the same thing: stack Cub, stack Polycub, and start compounding that yield. And then when the next bull cycle hits, you know, you make it big in dollar terms. So that's kind of the way I'm looking at all this stuff. And I'm looking at the whole ecosystem we built, and this is kind of the whole vision that we had, which is create, you know, that tagline of democratize, you know, financial knowledge and opportunities. And I do think we've done a really good job of that. And now is kind of that critical time where you're going to see it play out, where, you know, if people are smart, they're going to be accumulating all these different assets in this bear cycle. And then when you hit the next bull cycle, it's just going to skyrocket, because, you know, you got to look at things in dollar terms, and then you got to look at things in, you know, like raw, basically shares, like stock shares kind of. So you look at your Leo in terms of dollars, and obviously it's going down. You look at your Leo in terms of shares, and it could be going up a lot right now. So kind of a similar philosophy.
It's always difficult, because, you know, whether you're talking you know, Steam or Hive or Leo or whatever, you know, the time to be active is in the lows, because, you know, you'll actually earn more quantitative tokens, and then, but, you know, but the dollar value of the earnings goes down. So it's hard for people to keep that in mind and keep that longer term perspective in mind. But, you know, it does work. You know, assuming we come out the other side. So you know, I wrote a post,
The investment risk.
I wrote a post, you know, a year ago or so, and talking about how crypto in general is still a very binary bet. You know, Bitcoin was created in 2008. You know, Satoshi, you know, whoever he was or whoever they were, they took some technologies that were around at the time and was able to combine them in this really interesting, unique way and create a store of value that had nothing to do with any government in the world and could potentially, be available to everybody. So we're still at a point where Bitcoin is obviously way more popular than it was, 14 years ago. But the level of integration of Bitcoin into daily life is still not anywhere near complete. So, the question that any crypto investor has to ask themselves is like, well, will having a store of value, a value transaction mechanism outside of fiat controls be attractive in the future? And I think the answer is yes. So I think it's a very strong yes. But obviously people have different opinions. Some people think that the governments will come in and crack it down and do whatever, pass laws and things. And to date, we've seen that the laws, banning crypto, in China and Nigeria and other places, they don't really work because it's actually a decentralized permissionless system. And and those aren't just words, that's actual reality. So part of this whole meltdown that we've seen in the markets over the past few days has been that on Friday we got inflation numbers for May in the US here, and the month over month inflation in May from April to May came in at 1%, which obviously annualized is a 12% inflation rate. It's much higher than was expected because there were some signs earlier, like a week before, showing that inflation might be, it had gone up to like 8.2 annualized, and it might have receded a bit, so people were more optimistic. But then we got this slap in the face on Friday, and everybody panicked. The rationale being that, inflation is still running hot. That means the Fed will have to do more tightening than even what they've announced, and therefore, stocks and bonds will have to fall as money gets tighter, and then the chain reaction into crypto followed rapidly. So but that's all the market, the short-term stuff. That's in Buffett's terms, there's Mr. Market. And Mr. Market is bipolar and has no emotional control. So if you think crypto will remain attractive, especially when you have 12% inflation, having a mechanism outside of that system, if that's still attractive, then over the long term, it'll be okay. Short term can be difficult though. So you gotta have that survival rate to weather the bad times in order to get to that long term future. But I try to keep like a 10 to 20 year time horizon on crypto to get into that phase where it's actually a part of everybody's daily life. We'll see if that timeline ends up being accurate or not.
Damn, I just looked 2 to 3 years out, as in any crypto I buy now and over the next few months, I pretty much plan on holding for 3 years. And if I'm not willing to hold it for 3 years, then I shouldn't buy the mother loving stuff, because who knows when the next cycle is, or if things turn around here, or if Bitcoin's at 50K 6 months from now. But I know the reality is, based on prior market cycles and whatnot, that probably going to wait a couple of years until we see Bitcoin back at highs.
Probably so. We've done a lot of, you can talk to the technical damage that has been done to the chart. That doesn't go away. It has to be processed.
Yeah. I looked at the monthly chart yesterday and I was like, wow, we're actually effed.
Yeah.
Like based on the funny part is people that are calling for 10 and 12K Bitcoin.
Mm-hmm.
When I looked at the monthly chart, I was like, I can't refute it. I don't think it's going to happen, but I can't refute it. It is definitely a scenario that is on the table based on the chart, a longer term chart. I'm looking at a monthly chart. It's feasible. Is it a lower probability? Probably, but that doesn't mean it can't happen.
Anything what do you think about, I'm dropping a tweet here. A lot of people are talking about this 200 weekly moving average. What do you think about it?
Yes, I've been watching it.
It basically is broke, but is now trying to regain, right? Because isn't it right at 23,000?
It's 22 and
Yeah.
change.
Yeah. So we poke through, and right now we're like right there. Like we're literally at 22.5 right now. So if that holds, that'll be huge. But it's funny that people use that because it's like, yeah, we've been above it all this time. You look at a monthly chart, like we've literally, I mean, maybe in the early days it touched more often, but in terms of more established, it's literally bounced off at one time. The rest of the time it's just been above it, right? So that's the thing. It's like, all right, we always stay above this for like the history of Bitcoin. We're above this average until we're not, right? Because anything can happen. But that last time it bounced off of it, like you're looking at a monthly, that wick is like 4,000 to 6,000 points, like relative to like now's prices. So like we could
That's just a 1-day wick. In
yeah, that's what I'm saying though. We could wick down to 18. Well, it's not even a 1-day wick because it was on a monthly, so it could have been several days where we were below. But like we could go down to 18 technically, and then whatever a week later rally back above 22 and change, and looking back on it could be like, oh, that was the bottom. Yeah, like you look at it, then you look at the chart, like you see the wick, and when you're looking at a weekly or a monthly. So that's something I'm keeping in mind, that like if we go down to like, let's say 18 or even lower, like that doesn't mean that technically that moving average failed, because you can't look at that moving average on a daily chart and basically come to a conclusion of failure or success. Like you literally have to look at it like, all right, we poked through it this month. Did we close above it this month? Something like that, more so.
Yeah.
So,
It's hard to wait for that, while you're in the middle of one of those wicks.
100%. But that's why, like, that's why I haven't gotten like I did an initial buy at 22.5. It wasn't a big purchase, but that's kind of why I didn't get heavy, because when we were floating at 30K the whole time, I said if we get when we get down to 24, like from 24 to 20, like I'm a buyer and I'm pretty much loading up. And I've kind of backed off from that because I'm just like, honestly, like 22.5 is kind of like potentially the first stop. We could easily wick down to 18 or even 16, you know what I mean? So I bought here, and when we see 20, I'm going to buy more aggressive than I did at 22.5. And if we see 18, I'm going to buy more aggressive than I did at 20. And if we never see 20, then you know what? Happy day. I got a little more Bitcoin, not a lot, but who cares? Because I also don't have to ride out, sub 20. So who the fuck wants to do that?
Yeah, I've been buying. So I think my first buy was at 32, and then I bought some more 30, and then some 27. I bought some at 24.5. I bought some last night at 22 and something. But my buys are getting larger and as it goes down.
Yeah.
But what I've been really pleasantly surprised about is some of that Bitcoin is just sitting as Bitcoin. Some of it I'm putting into liquidity pools, and the mechanics of the liquidity pool have really helped strongly for me. So when Bitcoin was down, I think the first day it was down 15% or so. My liquidity pool position was down 5%. And it's because it's WBTC against USDC, and whenever you have a stable coin on the other side, you basically square root the volatility of the other side. So if Bitcoin's down 15%, then my pool position should have been down like 7%, but it was actually down less. It was only down about 5%. And I can only attribute that to the internal trading fees that it earns as people are selling in the market. And obviously with the Bitcoin markets, whether it's WBTC or BTCB or whatever, everything's being arbitraged constantly across the worldwide markets. And so there's a lot of activity going on in major market moves that's going through those pools. And so that added a couple percentage points back to my position. And then on one of these buys, I on the one I did at 22, I took that and I added that into the pool, and since then we've been basically even in my pool position. So I've been really pleased with how that's holding up. So something to think about in these downturns is if you're in the pools, you are having a less volatile experience.
What are you talking like a BTC, like BUSD pool? Are you talking a single staking pool? Like which pools are you in?
Well, the one in particular that I'm in right now is WBTC USDC, and it's staked in QuickSwap. And before then, before a few weeks ago, I had been in the Try Crypto pool for Curve, and had that staked on Polycub. But you know, the FUD with Tether has gotten ratcheted up quite a bit, so I just wanted to just not have to deal with it. So I just moved over to the USDC pool, as opposed to having the Try Crypto, which has USDC and USDT and DAI. So that was the only reason I made that move. But it's working out. I'm pleased. So the question is, what level should I be buying at? Because Cal was talking in the Discord the other day about dollar cost averaging, and usually you think of that in terms of time, like once a month or once a week or whatever. But you could also think of it in terms of price. Like every $500, every $1,000, every particular levels. There's a on the futures platforms, you have this programmatic application called grid trading, where you just set up different levels across a range, and as it drops you buy, and as it rises you sell. It's sort of like a quasi AMM position, but with leverage. So I think about that in terms of buying spot at different levels. What kind of I mean, you mentioned 20 and you mentioned 18 as things you're looking at. What other numbers in there are interesting?
I mean, in terms of even going lower,
Yeah.
12, 10, 12, I think is the brings us to the 80% retracement, or was it 14? I got to look back. It's either 12 or 14. That is the 80% retracement from the previous all-time high, which is what we got last time in like 2018. We did an 80% retracement. Obviously, I mean, I don't know. 10, I think, is just become a number because of A, it was a former all-time high, and B, there was something else behind it, and I forgot. I'm drawing a blank on what it was. Damn. Yeah, totally eludes my memory at the moment. But so that's how some of those numbers got out there. But 18 is more chart based. Like I said, that the number below that is based on the 80% retracement, which I have to double check exactly what that number was.
Yeah, I've been looking at 18 and 12 as well. So Addicted was giving me some crap in Discord the other day, said nothing between 18 and 12. I don't see anything.
I'm like, it's just a lot of real estate to the downside.
Yeah, I mean, it's a big range. It's a 50% range, from 12 to 18, but that's how the chart went. So, and there's always this, how much of this is all self-fulfilling prophecy in that everybody's looking at the same chart and picking out the same levels, so.
Yeah, which is kind of surprising, I guess, why certain levels ended up, I guess, breaking down, because everyone was expecting it. But I think the problem with that is institutional money is going to do what institutional money does, and it doesn't matter if everyone's looking at it. If they need to rotate out of Bitcoin, levels become almost irrelevant, because you're just talking about large amounts of money being liquidated, and that's just going to move the market wherever the fuck it moves it.
Well, that's kind of what I think has been behind this huge move over the last little while. We've seen, just massive moves in Bitcoin, even compared to normal Bitcoin volatility. It's been large. So, I mean, how much do you think was fueled by margin calls and liquidations and all that? I've seen some rumors that MicroStrategy had to liquidate some.
Yeah, I was just going to say.
Oh, wow.
I haven't confirmed that.
I was just going to say, speaking of institutional money, MicroStrategy, everyone's saying that they basically on their last earnings call, their president said if Bitcoin dipped below 21,000, they would trigger a margin call. And obviously at the time, I think Bitcoin was like 30K or something like that. So he was talking about it as like in theory. And then obviously Bitcoin dropped to below 21K. So They also did say, so that it's, I do wonder if it's just kind of a FUD thing, because MicroStrategy didn't collateralize all of their Bitcoin. They collateralized like a small percentage of it. So that's even what he said back in last month, is that they had like, according to this article, they had like 95,000 Bitcoin that was not collateralized. So, you know, at these prices, it's like $2 million. So, you know, their stack of collateralized Bitcoin was a lot smaller than their total Bitcoin. So I do wonder if it's just some FUD, because it's not like they're actually getting, it's not like they're going to liquidate their Bitcoin because they can't afford their loan. It's it's more along the lines of they're going to add more collateral, which they've got.
Yeah, that was my
Yeah.
assumption, would be that they would add collateral. I mean, the only way I think MicroStrategy gets in trouble is if you see maybe like $10,000 Bitcoin. Maybe at that point they struggle to raise capital and they have to do liquidations. But at the same time, for me, I think like for Bitcoin to get down to 10K, you need a catalyst like a MicroStrategy liquidating. So you know what I mean? So that's why it's like, it's hard to find, I guess, what's going to push Bitcoin to an extreme price like that.
So what do you guys think the odds are that we see Bitcoin drop below 20K?
If I had a bet on yes or no, I'm putting my money on yes.
You know, I think you know, we've got a Fed meeting tomorrow. You know, there's already rumors circulating that we'll see 75 basis point hike.
Yeah, I saw that chatter. People are getting pretty convicted
You know,
about this 75 basis points.
I saw one analyst saying 100 points.
I know.
So you know, it's I think there's more definitely room to the downside just in markets in general. You know, as we get a confirmed recession here for Q2. Well, confirmed under the old rules. You know, they've changed it to now they just decide whenever. But
Are you
yeah, so
convinced we're definitely going to have a recession this year?
I think
I'm
we're
pretty
two,
good. So you know,
2 months deep into it, I think.
you
I
know,
don't know.
Q1 was so you know, it all comes down to the it's the inflation deflator.
True.
So for those who don't know, the GDP gets reported, gross domestic product, which is one measure of total productivity in the country. And you know, there's all kinds of games that are played in terms of like how that number is arrived at, but they come up with a number and then they subtract off an inflation adjustment. So there's nominal GDP and then there's real GDP. Nominal is the number they came to. Real is after inflation adjustments. So there's always this this incentive to make the numbers look better than they are, is to discount the inflation and you know, present a more attractive real GDP number. So under the old rules, if real GDP is negative 2 quarters in a row, then that's technically a recession. So how you know, Q1 we had negative real GDP. Q2, will we continue? I gotta say yes. You know, whether or not it comes in officially at that, you know, if they play with the inflation numbers at all, I don't know. But in terms of like everybody, like people's real life experiences, you know, inflation is just insane. And you know, everybody wants their stimulus checks that they got in 2020 and 2021.
That they're now giving back in the cost of gasoline alone.
That's exactly right. So you know, this is the other side of that. And it's not just handouts to people, it's obviously handouts to corporations as well, you know, with the PPP. There's actually a big move. There's actually a big move right now in the tax world for the employee retention credit, where there was this credit that was passed that if you were like severely negatively impacted by COVID, whether through just business dropped off or you were shut down by one of your local governments, and you kept your people on staff, then they'll give you basically 70% back on the wages that you paid. It's a little bit more complicated than that, but that's the basic idea. So you know, so now there's all these firms that are springing up to go around to businesses and say, hey, did you claim your money from the government for this program? And most businesses have not. So there's another wave of money going towards businesses in America. That's you know,
More free money.
In terms of the aggregate, it's just more free money into the system, and that's not going to reduce inflation at all. But for you as an individual business owner, it's like, well, get yours definitely, because you're going to be negatively impacted either way. So
Yeah.
but yeah, all those things that came from, the, what was it, 40% of all dollars were printed in the last 2 years, something like that. This is the other side. So that, real life didn't change. So if 40% more money is in the system, then prices are going to rise by 40%. And they're trying to manage that, to lessen the impact. And, we'll see how successful they are.
So I didn't even, I guess, see. So Q2 GDP was lower.
Well, it hasn't come out yet.
I was
We're
gonna
still
say,
in
I think-
Q2.
So what was Q1? I literally don't pay attention anymore. Were we down in Q1?
We were down in Q1 on real terms.
Well,
real
what about in terms
GDP,
of what the government tracks as being recessionary?
I think it did come in as negative from the government report.
Interesting.
Do a quick Google here.
And maybe technically we'll be in a quote unquote recession. I don't know, because what I try and do is detach myself from the stock market and even crypto, and then compared to the economy, right? Because just because the stock market's getting its ass kicked the last 6 months doesn't mean that the economy's in a recession. It may mean the economy is going to go into a recession, but
yeah. So yeah, it was negative from the official report. I'm trying to find the actual number. Just seeing a chart here.
If it was negative in Q1, they're going to print a negative in Q2 to basically be like, oh yeah, we had a recession at the beginning of the year, and then somehow, later this year, things will be better. And like, look how well we weathered that. Vote for us again.
Yeah, negative 1.5 on in real terms is the latest version, because they revised the numbers a couple times. So Q1 at the moment is negative 1.5 in real terms.
Interesting.
So did business get better in Q2? Doesn't feel like it.
Probably not.
I don't see any less complaining in the social media space. So, I think there's a very strong chance that we slip into official recession here. We'll get the first look at the numbers at the end of July, I think.
I mean, what's crazy about it is, save for the price of everything going up, outside of that, I don't know. It doesn't really feel like a recession. Like, things don't feel bad. Like, outside of obviously, crypto's down, stocks down or whatever, but I don't know. It just doesn't feel like, that general sentiment when we're, I guess maybe because we're just getting started. But
yeah, I think that's the thing. The layoffs haven't really hit yet.
Well, hold on though. That's funny you mentioned this, because this goes back to what Cal was saying in regards to, being able to find devs again, right? I actually think that, yeah, there's going to be layoffs, but at the same time, I don't know that it's going to be like a net loss, in that so many employers are still desperate to hire people because no one wants to effing work. I think what's going to happen is basically like what you see with devs is a microcosm of what's going to happen in the economy, is that basically the good times are over and people are finding like, shit, I got to go get a job again.
That could be.
Stimmy money's gone. They're just buy the effing dip in stocks, and I'm an awesome stock trader, even though I've never traded in my life, is over, right? Like, I bet my electrician is a hell of a lot easier to get work done from right now, because he's not day trading half the time anymore, or day trading while he's at the job, like literally phone, like on the ladder, like trying to trade while he's doing I'm like, seriously, guy. But yeah.
Yeah, Unorg Militia has a good quote here. As long as the beer is cold, football is on every Sunday, and the credit card still works, it won't feel like a recession.
And he's honestly got a very good point.
A year ago, there were these articles coming out saying that all these people were not in the labor force because they had like $50,000 in crypto or something like that. So yeah, you might have a point there that
The
you know,
crypto punks going back to work.
that, the mix of labor will change, but in terms of like overall unemployment rate, we might not see a huge spike like we did. Um, you know, for a lot of the crypto bros, they're too young to have experienced a real bear market. So it's like we had a COVID bear market, but that was like special circumstances. Everybody kind of understood that this was a temporary thing, and it was what it was. But in terms of like a real grind, 2008 to 2012 was the last one, and Cal was like 11 years old or something. So so a lot of these people have not enjoyed that kind of experience before. I've gone through two. I went through the dot-com crash, and I went through the '08 crash, and it's a different thing. You can't just rely on gains like you do during the good times.
Yeah, that's why I think that conversation about runway and looking at what you spend every month, it doesn't just apply to a startup like LeoFinance. It applies to, your personal life and expenses and
Oh yeah.
type of thing that you wish would be taught in schools and everyone would know is that, when times are good, start building up a war chest. I think I actually wrote a post. I was trying to find it, but I think I wrote a post like almost a year ago when crypto was starting to go crazy. And I basically just said, the goal for LeoFinance right now is to build a big war chest and be ready for something like this, because just having gone through the bear market of 2018 kind of taught me that expect basically, plan for the worst, hope for the best type of strategy to running all of this stuff. And even in my personal life, just kind of expenses and income wise. So my views on it have shifted a lot. And like you said, I was like, how old was I? In 2008, I was 11 years old. So
Nailed it.
yeah, you did. So I don't know. I really don't know a lot about what happened. I don't really remember that much from 2008. So I was hearing all this stuff about, build a big runway, be ready for a recession. I think I actually over planned for it, where I think a lot of people underplan and they don't take enough profits and they don't, build a big enough war chest. I actually think I took that advice pretty seriously and over planned for it, because, the one thing that scares me is the unknown. So if I can plan for things that I can't see, basically by over indexing and going heavily in the other direction, I think that is a smart strategy. So I think for a lot of people, if they were smart, they took a lot of profits during this bull cycle, put them into stable coins, put them into fiat investments, and now they're sitting on some dry powder. And if you didn't, then you're kind of where I was back in 2018, where I had no stable coins, not much of any fiat investments. I was pretty much all in on altcoins, thinking that we were going to go to the moon. And basically I got left holding the bag in 2018. And what I did was just stack on platforms where I could earn, like Steam. And I just basically stacked really heavily. And because I didn't have dry powder, I used, knowledge and time to earn more. And then, obviously that worked out really well when the bull cycle hit. I think in dollar terms, it was probably some like crazy figure of like how much I was earning per hour, like in terms of how many hours I would put into like Steam and making content and curating and engaging with people. But then obviously when the bull cycle hits, all of that time you spent and all those shares you were in, like we said, go for, Wu said it really well. She said, what'd she say? Focus on units, not price. So, focusing on stacking your units of things like, Hive, Leo, Cub, Polycub, and then waiting for that bull cycle to hit, I think is a great strategy.
Yeah, definitely so. I was just thinking about my own runway in personal life. I've probably got about 2.5 years of runway, which is decent.
What are we considering runway as far as like we're talking about like a combination of like stable coins, cash holdings, liquid investments, like
Well, no, I'm just saying stable coins and cash. That's it.
Yeah. Yeah, I mean, I consider it anything that is easily liquid and not correlated to markets. So yeah, basically stable coins, cash, some fiat investments that are sellable.
interesting. I'm not in terrible shape, but it's very interesting, you know, because obviously being the scaredy cat, you think that I would actually kind of really be overweight with the runway. But like I said, the last 6 months, I don't know. I just, you know, kept taking away from stables and kept, you know, grabbing coin. I probably have 2 years though, only because my lifestyle is so inexpensive.
It's only the ratio that matters.
Yeah. I mean, I have the least percentage wise, and it sucks because I was probably overweight stables during better times, and now I'm underweight. I have the least amount of stables by percentage right now, I think, than I ever have, and dollar value in a way, relative to overall amount of you know, holdings, which I don't know even how I fell into that. I realized that like a couple of weeks ago. I'm like, how the hell did I put myself in this position? Like it kind of just happened.
The interesting thing about stable coins and you know, like look at a portfolio and assume that it's got like Bitcoin, Ethereum, you know, Leo altcoins in it, and then some stable coins. Like let's say that portfolio 2 months ago was 25% stable coins and 75% crypto. If you did absolutely nothing, then your position kind of looked like Neil's LP, where your 25% in stable coins just became, you know, 45% because the value of your crypto dropped. And now if you want to rebalance, you could just rebalance back from 45 to 25. And that leaves you with a lot more units of crypto. And then obviously when the crypto market recovers and you see that percentage start to go, that stablecoin percentage start to go down. So you see it go from 25 to 15% because now your crypto is worth more. You leg back in and get your position back to 25%. I started trading my portfolio like that. Probably about a year ago. What's that?
It's volatility harvesting.
Yeah.
I got that from Harry Brown, the permanent portfolio approach.
I think it's a great approach. Takes a lot of the emotions out of it for sure.
You're basically doing allocation rebalancing, you know, obviously like even like, you know, Ray Dalio talks about that as kind of like one of the wonders of the world in terms of investing. It's funny because I'm looking at it a little different. Like right now, I haven't done the math, but like, I'm sure if I look at it now with the downturn we've had in crypto, my stables are probably like back on par where I normally am. But the reason I'm looking at it a little different is because I was in this wonderful position where I had no money in crypto for years. Like, you know, I got in Bitcoin early, I cashed out, right? And then I put money in, and the only money I put in like the last couple of years, I put into stables. So I technically had no risk really in terms of actual fiat dollars. And now I'm in a position where about 50% of what I have of fiat in crypto is in stables. So me personally, I have a lot more risk now because I went from almost a risk-free trade to now I have, you know, X amount of capital, 50% of my fiat now floating in cryptos that have gotten fucking wrecked. So it's just like I went from a position of basically never being able to really be down because all the cryptos I held were profits. You know, it was all house money. I was playing with house money for years, and I'm no longer playing with just house money. So that's a unique situation. I know, I'm sure there's other people out there that have that, but I know it's not the most common situation. But with that being said, ironically, I feel like I have more risk on now at the exact wrong time in a way.
Well, I mean, I'm not sure that's exactly true because I think now is the time to start going risk on. You know,
Well, yeah,
in the winter is the time to accumulate.
well, yeah, but that's the problem. I'm not accumulating. That fiat's already in there. I wrote that fiat's been exposed and I wrote it down.
I
Like
see.
it's basically gotten cut in half or whatever it is. So, but yeah, any new fiat now definitely makes sense. But I think it goes back to like Cal said, in terms of booking some coin, back when like room was like at $10 and things like that. And now you have that fresh powder.
Yeah, I bought back too early because I sold it like 10 or 11 a bag, and then I bought it back at six and a half. And
Yeah, that's the problem. I never sold anything.
yeah. Well, are you in the LPs? Because that's automatic
Well,
selling.
yes. And that's what the LPs are for. And that's a
Yeah.
big reason why ILP is, because it's kind of done on autopilot.
I'm a fan. But yeah, I think, so I mean, obviously we're all in the crypto markets, and even in my non-crypto stuff, I'm looking at financials all day, every day, just because of the line of business that I'm in. But even with all that, it's hard for me to be objective about my own stuff. So I think everybody needs like a CFO, that's somebody else
Yes.
to help, kind of gut check all of your major moves. But there's not. I actually had this idea to create that as a service, but the numbers don't work, unless you're have a huge portfolio, where it's actually worth it in dollar terms to pay fees to have somebody do that. So I don't know, but something that each individual investor should keep in mind, I think.
Indeed.
Look at your portfolio
So-
like you're a CFO, like you're
Yeah.
the CFO of your life.
Which you are. But it's hard to keep that objectivity.
Yeah.
Well, and there's something to be said, obviously, for just keeping track of stuff. I mean, obviously, your nickname is McSpreadsheet for a reason. There's other people that, aren't. In fact, I was talking to my buddy Doug about this. Like he's like a mindset speaking coach and all that stuff. And he said he's just like, and his wife is in the same business. He said the biggest problem, he's like, neither of us have the admin facet as part of our personality. And it's always nice if one person in a couple or a team has that. And I told him, like, I hear you on that because I'm missing that as well. And I don't keep track of stuff as well as I should, because like I just hate the admin task, so to speak. But there's something to be said for it, because by keeping track of this information, you can make more informed decisions and you can be more nimble.
Yep.
So like even with my crypto, I mean, I try and do like a 1 month review. I'd be lying if I said I did it every month. And that's definitely hurt me, because I'm sure there's moves I would have made.
Well, the cool thing about everything being on chain is that if you say have a portfolio on Binance Smart Chain and Polygon and then essentially that, you do your actions every month in those two portfolios, and then you track it with something like DBank. If you set it up 1 month to have tracking and say, okay, I've got this much here, I've got this much here, this is what I did this month, stuff like that, then you could create that framework and then hand it to a VA and then send them BSC scan and Polygon scan and say, here, every month, check in on this and tell me, and then just fill out the spreadsheet and then send it to me.
Yeah, and we was talking about creating a tool to do something somewhat similar. But yes, but none of that replaces an actual person saying, what are you doing?
WTF.
So I mean, all the data is there. You can look at it. You can make your spreadsheets. You could even hire the VA to compile stuff for you. But you still have to look at it, and you still have to make reasonable decisions. So that's the hard part, I think.
This service actually does exist, just not technically. It's called Share Your Investment Moves in General Chat, and Addicted will 100% respond with WTF are you doing?
That's kind
No
of
matter
funny
what it
because
is.
when Neil was talking about that, I was thinking maybe we should create a community page called WTF and then you can tag it and you can say, I'm going to do this with my portfolio, and then put it in that community, and then everyone
like
can
it.
jump in and say, hey, this is what I like about it. This is what I don't like about it.
I like it. I think it's a good idea. And I think we might as well just automatically
The
make Addicted the
WTF
moderator, because you know he's going to be the one commenting the most in that group.
Write that down.
I just wrote that down.
Excellent.
The WTF community. We might do it.
Kinda like it.
Addicted will be the sole moderator.
It's great.
I've been lax in tracking my own portfolio's. Like, I don't even know
What? I don't
I
even know who you
know.
are anymore.
I know. You know, I use a Lucid Docs or Lucid app. It's an online flowchart kind of deal.
Oh shit. I don't know. I gotta
Um,
check it out.
It's really great for mapping out, you know, stuff that you're planning on doing. I do it with tax plans. I say, okay, here's your company, here's the flows that we're going to have. But I've been thinking over the last week or so that what I should do is map my portfolio out like that. It's like, okay, here's Polygon, and inside Polygon, I've got, you know, these different buckets of things, and here's Binance Smart Chain, and here's wherever, and then, you know, having that visual, I think will be even better than having the numbers in the spreadsheet, which you also need in order to do the actual math. Um, but you know, it's all admin time, right? That all has to be done, like you were saying. So
Yeah. I mean, case in point. So like I have a spreadsheet. I mean, obviously, like, you know, I look at D-Bank and things like that, but for my overall portfolio in terms of, you know, coins I just hold, and then obviously, you know, I plug in what my LPs are worth. I have a spreadsheet. The last update I did, Neil's going to be sad right now, April 25th. So it has been,
well, that's not bad.
yeah, it's been almost 2 months, but it's been
I thought you were going to say like 2019 or something.
no. It's been almost 2 months. I'm not gonna lie. I try and do it every month. The reason, well, I slacked because like I have January 3rd, I did it, and then I didn't do it again until March 29th. So I went almost 3 months. Then I did it a month later, basically, and now it's been almost 2 months. And I'm not gonna lie. And Cal, you can put on earmuffs because you're tired of hearing this. The reason I haven't done it is because I can't deal with plugging in the Cub number. So I just don't even update it. It's just pretend it's all okay.
Quarterly reports, yes.
Yes,
Yeah.
quarterly reports, which is fine. I feel like quarterly, absolutely. I think when it comes to crypto, though, I mean, shit, everything moves so fast.
Yeah, volatility is so high that it's hard to justify waiting that long. Like,
3 months in crypto, shit, that's like a
we're
year.
down 30% in 4 days, you know. So
Exactly. And I mentioned that I think in Discord yesterday. I was just like, it's pretty funny that like Bitcoin was down 15% yesterday. I was just like, and it's not even out of the norm. Like people aren't even, if the S&P was down 15% in one day, literally it would be like the world is over. You know, the news media would be like, get your canned foods and your guns. You know what I mean? Like,
yeah,
but that's crypto for you. 15% is like, oh, okay, this happens.
it does.
You know what is also funny too? If you think about this whole conversation so far and what everyone's talked about in Discord, and that occasionally alts get mentioned, but everything when we're talking about crypto being down, and what's everyone looking at? The Bitcoin chart. What's everyone talking about? Bitcoin. Bitcoin is still so much not just the leader, but like what crypto is. Even to the crypto heads, what crypto heads, and we're talking about pretty much Bitcoin exclusively. You know, we mentioned Rune once.
Yeah, well, I mean, I've been banging this drum for like the last 3 months that, you know, the alts that did well in the 17 cycle did not do well in the 21 cycle. And my expectation is that the alts that did well in 21 cycle will not be the ones that do well in the next cycle, just because, you know, technology evolves, the issues that come up change, and there will be new things created to address the new issues in the next cycle. So, you know, as far as I'm concerned, the only 2 things I'm interested in accumulating during winter is Bitcoin and Ethereum. And Bitcoin because it's the proxy for all of crypto, and Ethereum because it's the proxy for all, you know, things beyond just transferring value. So any kind of smart contract thing is essentially Ethereum owns.
I 100% agree with that. I mean,
And
that's the most prudent play,
I think so.
because everything else is you're gambling on new altcoins, figuring like, oh, is this going to be the darling
Why,
of the new?
why I know accumulate Hive? Because I don't like the tokenomics. I recently have had to buy more Hive actually just to operate my Splinterlands accounts. But beyond that, if it gets
And for
to
Beehive.
and for that's true, I do have Beehive. The yield there is attractive enough to make it worthwhile. Um, if we get down to those lows that we saw, like the 8 cent, 10 cent, I'll probably pick up a bag. Because I think the community support is there at those levels. That I don't think the downside is very great. Once we see 10 cents, but here, what are we at? 35 cents, 37 cents. I think there's still could possibly be another 60% down. So I don't want to buy any Hive until I see it as a slam dunk.
Yeah, I think that's what's interesting about, and kind of goes back to our conversation about Cub when we started, is that when you reach these like low bleeding valuations, it's like, okay, has the community left the project? Is there any technology being added? Is there a roadmap? Stuff like that. Because when you look at like the history of Steam and Hive, it's like you reach these like crazy lows and you're like, no way, like how is Hive 10 cents? And it's worth, I don't remember what the market cap was at the time, something ridiculously low. And you're like, well, the community's still here and people still talk about it in a great way. And there's essentially like this diehard diamond paw community that won't sell anything below these prices. So that conversation starts to get a lot more interesting at these times. I bought a ton of Hive back at 10 cents. That was definitely one of the best investments I ever made.
And then did you sell it at $3?
I did. I sold a lot above $1, and then I obviously started reaccumulating recently, slowly since 75 cents. I started buying a little bit, but I'm still waiting for like 20 cents and below, and then I'll go heavy again. And if we see 10 cents again, I will go very heavy in the Hive, and then I will wrap it all and put it into Beehive and Beehive.
But you need that Polycub to balance it out.
Right. So I've been buying Polycub too, under 20 cents. That's been easy.
Polycub, which is outperforming per Cal's little graphic in the chat here.
I posted Polycub, BNB, Bitcoin, Ethereum, Thor, Chain, Rune. That's obviously, those are kind of like the top ones that I look at most of the time. In terms of like, if I want to compare Polycub to the rest of the market. Polycub's outperforming everything right now. So I think that's kind of interesting. And I'm sitting around earning, 80% APR. So you don't hate to see it.
Yeah.
Why isn't Cub on that screenshot?
This is just for Polycub tracking. This is just to compare it to the rest of the market. But yeah, I got one of these for Cub and for Leo too, just to compare those to the rest of the market.
So here's a more specific, relevant question for you, Cal. Now that I think it's fair to say winter has begun at this point.
100%.
Devs are starting to message you and all that kind of stuff. So when do we get Phantom Cub and Avalanche Cub and all that? As it seems like, from everything you're saying, that all these projects should accelerate. And so what are your thoughts on development of those new outposts on other blockchains?
Yeah. So what I have planned is kind of this big shift in Polycub, which is it's basically already started with PHBD and then Phive and then PSPS, which is this shift towards value accrual. And basically, if you actually look at the timeline of this shift, it was a few months ago where I started looking at this kind of like what they were talking about on that podcast that we talked about earlier, which is that we are probably going to enter a bear market, and we need to be prepared for that in a lot of different ways. So from a more macro project standpoint, the preparations I made were to to have a long runway and make sure that we could operate for the next, 2 to 5 years without any issues. And then obviously onboard a lot of devs during the bear market. And then going into more of like a platform by platform view, I started looking at, what is wrong with Cub and what is wrong with Polycub, and what can we do to make them better and make sure that they not only survive the bear market, but make sure that they can actually, thrive when you start cycling from bear to bull market. And I think there's a lot of, I think that kind of question that I started asking was kind of enlightening in a lot of different ways on how we could build more sustainable platforms and make sure that, we can, because like I said, the goal of Cub and Polycub is to democratize that financial opportunity of, we want to have places where you can LP. So like if you want to have a curve LP and earn yield, you can do it on Polycub. If you want to yield farm on your Hive, you can do it on Polycub. And kind of creating those opportunities that are lasting and sustainable. So the entire mission with Polycub, even before it launched, was to create something super sustainable that would basically rise over time, kind of like Bitcoin. And I think we had a lot of good structural mechanics to do that from the beginning, but I think there were a lot of holes in that structure, and that's kind of like what I started to think about a lot. And I think those holes have been filled by things like PHBD and pHive in terms of creating more value accrual and sustainability. Then I started thinking about things like Vex Polycub, and how we were working on the bonding, and the delays on bonding are more because I wanted to change the platform mechanics before bonding was released. And then looking at things like the collateralized lending protocol and liquidity, and then obviously that governance utility. And since the launch of governance utility, Polycub has changed drastically, where we now have those weekly yield votes that change the dynamics. It gives a lot of utility to holding Polycub and gives you a reason to have it. So essentially what we're doing now is taking all this technology and just focusing really headstrong on Polycub. So that's from a development perspective, we've been focused so heavily on turning Polycub into this sustainable, vision that I had. And, I would say once we have these mechanics in place and see that it's working on Polycub, which I think we're starting to see already, and it's going to kind of keep unfolding in the coming weeks, basically seeing Polycub rise back to $1, and even in the bear market, I think that's entirely possible, and kind of seeing this whole sustainable plan start to play out. Then we're going to start taking all of this stuff. So I'm going to answer your question. This is my very long way to answer your question. We're going to start taking all this stuff from Polycub, then we're going to start doing it on Cub, and Cub is kind of going to get this like big V2 update all at once. So we're going to say, okay, on Polycub, we did all this stuff and it worked really well. We did governance utility, we did Vex Polycub, we did bonding, protocol and liquidity. All this stuff worked super well. PHBD, bHive or pHive. I always get those mixed up. And then take all that stuff and you turn it into a V2 Cub update. That whole update goes into Cub, and then we see the same thing that happens to Polycub happen on Cub. And then from there, obviously, we can start exploring again those ideas of outposts, because we explored those on those previous podcasts where we were saying, okay, and if you go back to those and listen to my answer, I always said, when we realized that Polycub reached the sustainable levels, basically that the number of the APRs and the capital pooled on the platform and the price of Polycub was sustainable, and we could see that in the long run, then we would start looking at the outpost stuff and start doing stuff there. So that's kind of where everything's at, where we're focused entirely on Polycub and making it extremely sustainable and putting all this technology into it. And then we're going to take all of that, wrap it into a big V2 update and put it on Cub, and then kind of go from there. That's where everything's at. And then obviously this ties back to the broader vision, which is why we kind of got into the whole Cub thing anyways, which is Leo Bridge and expanding Leo to all these different blockchains and giving yield to it. So if you look at what I just said and say, okay, well, all the focus is on Polycub right now and making it sustainable. Then the focus is going to wrap that into a Cub update. And then from there, start looking at things like Outposts. If you look at what I'm talking about, it benefits Polycub obviously because we're focused on making it sustainable. Then it benefits Cub because then we wrap it and do that update. And then all of that benefits Leo because Leo is on Polycub and Cub and it's earning yield from both. And then obviously you get Leo Bridge going. So all of this stuff is essentially just designed to create that circular ecosystem that we've always been looking for. So if you then tie that to what I was saying about the bear market and how it played out for me in 2018 with Steam, my entire perspective on how you could stack, like Wu was saying, you could stack units and then in the bull cycle obviously do very well. My whole vision is kind of coming together where this Leo Web3 ecosystem is going to enable anyone to be able to start stacking units in this kind of circular way on Leo, Cub, Polycub, and then do exactly what I did in 2018. So that's where my excitement is. So my long-winded answer is Outposts will come when we see sustainability.
Okay.
On
So,
Polycub and Cub.
As somebody who doesn't know, exactly what's going on behind the scenes, because a lot of people think that because Kat and I do this show weekly that we are on the inside. We are not. we are enthusiasts. We support the project. There is an old private chat room, from the days when we were like official curators.
I can prove with my results that I have no inside information. And if I did, that would make me the worst investor in the history of investing.
Yeah. So yeah, we don't have anything that you guys don't know. But so from an outsider perspective, that sounds like a year-long process because you got to do all the updates to Polycub. You got to make sure that those are good. Then you got to port it over to Cub. You got to make sure that's all good, and then you got to spin up the other things. So that sounds like in crypto terms a long time.
Yeah, I think on Polycub we're going to see, and I always get myself into trouble talking about timelines, but I do think a lot of these updates that we've been working on is going to be you're going to see a lot of it flow through Polycub in the next 2 weeks or less.
Yeah, and on the stacking units, I'm definitely doing that on Leo. I've Bro Fund is rotating into Hive right now, so I'm buying all their Leo miners as they come in staked, and so I'm up to just from Leo miners, I'm up to making 30 Leo a day, and that'll probably double over the next couple of weeks. And then you turn around a year later, it's like, well, if I'm making 60 a day times 365 days, it's a bunch of Leo. so there's definitely people out there who are following that methodology. And
Well,
go ahead.
I was just say, so what you just talked about is also a good example of investment risk, right? Because there's no guarantees. So, for instance, when Polycub launched, it was the first of quote unquote many outposts, right? And that was the focus. And this was before V2 and things like that became a thing, because obviously you pivot as you not only learn things but also as market conditions change as well, right? So with that said, there's been a pivot obviously, and now liquidity pools are kind of not liquidity pools, I'm sorry, outposts are this thing that is like, all right, let's get sustainability with what we have, and then we can do outposts, right? But going in, a lot of people stacked Cub in anticipation of future airdrops from outposts, right? That were going to come this year. But obviously things can change, things do change. So that's an investment risk that you have to be willing to take. It's one that I obviously took. So there are no guarantees in investing is really like the point that I'm trying to drive home. There's investment risk with everything, not only just with price, but also with initiatives. Things change.
Things do change.
Yeah, and this vision for Polycub and Cub is the outposts and the IDOs and stuff like that is all those kind of like big one-time hits that kind of there is a roadmap and a vision for those but really the core vision is, and it's kind of tied together nicely by this thing I saw on Twitter that I kind of got obsessed with, which people were talking about curve, and they were saying that cash flow life. I just kind of, I really relate to that, because the thing that drew me into Steam, 5 or 6 years ago, was that you could generate cash flow and essentially, build an income. Like crypto is cool. And the way I got into it was buying Bitcoin and buying Ethereum. And, back then Bitcoin was like $1,200, Ethereum was like $60. And I was buying them, and it was really cool to like accumulate them like a stock. But what really got me deep into the space was the idea of being able to earn income. And I got into Ethereum mining and all this other stuff, all aimed at trying to drive, income every single month. And with Cub and Polycub, I see them as a way to do that in an even more efficient and better way, which is that, that cash flow life is that you could build Cub and Polycub to the point where it is a, sustainable, reliable, and growing yield, forever. And the goal there is that we can build these platforms and consider them that there are 2 outposts on Binance Smart Chain and Polygon, for our community, where we are building a place where you can pool assets and earn yield forever, and kind of stack up income. And essentially it is just mining, but in a more digital and decentralized and liquidity oriented way, instead of buying a mining rig and setting it up in your apartment or something. And this is kind of what flips that on its head and says, if we can build a platform where there is a sustainable and reliable yield source, and it's growing over the years, I think that really differentiates us from the rest of the market. Because look at things like Anchor, like completely unsustainable. It's really cool that you can earn some great yield for a year, but then the platform disappears and it doesn't end up working. The goal here is obviously to do something a lot different than that. And what I would like to see is that we could build Leo, Cub, Polycub into this ecosystem where it's you can pool assets, you can curate content, you can create content, you can engage with content, and obviously invest in things like Cub and Polycub. And the goal is that for the next 10, 20, 30, 40 years, you could be building income sources and seeing these platforms gain a lot more traction over time. So I posted this chart in the AMA chat about the monthly active users. So what Wu was saying is a really good point, which is that it is like a sales pipeline, this whole ecosystem. So you drive people in through one direction. Usually that's from LeoFinance, which is like the Web3, blogging, social media aspect. And then they start learning about the platform, they start using the platform, and obviously the social media stuff's a lot easier to use and understand. And then over time, they start reading about, Cub, Polycub, and being able to pool assets. And they're like, oh, wow, I can take, some of my Bitcoin and I can pool it here, earn 15% a year. So it is kind of this interesting pipeline where you've got, this cohesive ecosystem where you can blog or curate and earn some Leo, then you can bridge it over to Polycub and earn some yield. I think it's like 25% right now. And we are creating that cohesive ecosystem. So my focus, especially in this bear market, is going to be increasing the monthly active users. So this is a chart from Dals's posts each week. So in April, we had 622 active posting accounts. So posting and commenting. So what we really need to do is grow this number, because if this number, like, let's say that this number grows, my target is to kind of get it to like 2,500 by December. So if we see it grow from 600 to 2,500, we've got almost 5 times as many people who could potentially be, pooling assets on Cub, pooling assets on Polycub, buying Leo and curating, creating content on Leo, curating content. So it starts to get really interesting when you focus on, there's this one thing we can all focus on as a community, which is to grow the monthly active users. And from growing that, it grows everything else. And that's the entire idea behind, a cohesive Web3 ecosystem, which is that, what benefits one thing, it benefits all things, LeoFinance. So
yeah, that's true. I remember a couple years ago we were talking about Leo prices, and I was making projections based on like number of users, and the number 4,000 users was sticking in my mind for I forget what that translated to, but higher number for Leo, number go up.
Yep.
So yeah, I mean that does make a lot of sense. So obviously communities are part of that initiative to grow the the user base. I can't help but think that Project Blank would be a huge mover. So there was something launched the other day on Polygon for social media. I forget what it was exactly, but I am convicted that paying for social media transactions will never work.
100%.
So anything that requires gas, just full stop, you are going to fail. Because who wants to pay gas to show you my picture of my cat? So Project Blank, being built on the Hive infrastructure, obviously does not have the gas. I mean, I hesitate to say it has no gas because it does require power staked and all that kind of stuff. So it's a quasi kind of gas, but it's like a one-time thing instead of a continual thing. So I can't help but think that it would move the needle significantly. So sooner rather than later on Project Blank, and now that we have dev people coming out of the woodwork.
Yeah. I mean, the timeline definitely gets moved up every time a dev gets added. One thing that's kind of interesting on the roadmap to Project Blank is something called threads on LeoFinance, which is essentially a version of Project Blank, but built on top of LeoFinance, where it's almost it is almost Project Blank, but not exactly. And part of the reason we're doing that is to build a lot of the structural technology, and then obviously make it a lot easier to port into Project Blank. But yeah, I think we could see threads. I think we could see threads, before the fall of this year, and that threads feature is really going to be kind of like this testing ground where it is going to be like crypto Twitter on top of LeoFinance, and obviously that brings a lot of interesting features to the platform. So I do think we could see, kind of based on some things that happened with our team, in the last like 2 weeks, bringing on some new devs. I think we could see threads very quickly. This community pages release turned out to be kind of a nightmare because we coupled the release of it with a full revamp of Leo Lightning, and that kind of brought a lot of issues. So if you've been using the UI, there's been all sorts of crazy bugs and issues, and all of that stuff is Lightning related. That's why like sometimes like there were all these different things that broke, like being able to create a post broke, seeing your post show up in the new feed broke. That's all Lightning. That Lightning handles all of that stuff. So that's why everything kind of broke at once, and then we had to fix everything, kind of one at a time. Almost all of that stuff, if not all, should be fixed by now. So my public service announcement is that if you, and I've been putting this in posts recently, but go out and use the Leo UI, and if you discover any bugs, definitely go into the bug reports channel and open a bug report, put some screenshots in there, as many details as you can, because we've been patching all of these bugs, and basically getting Lightning to this point is like a critical step for a lot of reasons. So the reason why I bring it up is because it's a critical step for Project Blank. It's also a critical step for Leo Mobile and this whole Leo merge idea, which is to kind of merge mobile and desktop and create like a super UI that we can have all the devs, instead of having a separate dev on Leo Mobile, separate dev team on LeoFinance.io, we can have one dev team working on a core code base, and then you can have essentially just adaptations made for each one. So this Lightning update is a huge step in the right direction for things like Project Blank and community pages and threads. So it's really important. It's one of those back end things that people don't really appreciate, but it's the new Lightning update is extremely important. We spent probably like 3 months developing it.
Okay. So soon is now sooner.
Yep. We have gone from soon to sooner. That is for sure.
Just so I don't misrepresent in the recap. So what exactly is threads and what exactly can I share?
So Threads, the short description of Threads is basically Project Blank on top of LeoFinance. It is like a proxy Project Blank where basically what Threads does, and this is part of that new Lightning update, is pull comments from LeoFinance and use them as top level feed posts. So like you'll go to a page called like leofinance.io/threads. And on that page, it's going to kind of look like Twitter, where there's a comment that's shown as like a top level tweet. And then all the replies to it are, if you click on that comment, it shows all the replies to it. And it kind of creates a thread of a discussion. So
would you say that this is an alpha version of Project Blank?
It kind of is. That's kind of what I've been getting at, is that it's like a proxy version, like a small test case of Lightning to see how it works. Where you kind of have, so like a good example would be like, look at Leo Market Talk, which is run by Taskmaster. If you go to those posts, what he does is he takes like news articles from crypto and posts a comment so he posts every 24 hours. Leo Market Talk, the account, posts a top level post. And then on that top level post, Taskmaster will comment replies to it and put like a crypto article, and then he'll kind of kickstart a discussion where other people can then comment beneath it, what their thoughts are and all that stuff. So posting a screenshot. So essentially what he's done is kind of create a proxy Project Blank within posts every 24 hours on LeoFinance. So what we're doing with Threads is basically we're going to take comments like that one. So like the one I just posted, where RooFans posted a link to an article and he said, "What's your take on Litecoin turning into a dark coin?" And then Taskmaster replied to it. That first comment would be used as like the top of the thread. And then you would go to this page and it would show that comment. And then you click on it and you'd see Taskmaster's reply beneath it, which would look a lot like Twitter. And that's basically how Threads work. And then it really is like a proxy Project Blank, and it changes the entire way that someone could use the platform, where you may not want to create content. You may not even want to read, articles and long form content. So instead you could go to the Threads page and look for things like this comment, and you might be interested in Litecoin. And if RooFans tagged, Litecoin in it, then obviously you can sort by those types of filters. It's basically creating Project Blank on LeoFinance, and it gives us a good way to test Lightning and see that kind of our structural system works. And then obviously we can go after that bigger Project Blank release, which is going to be this is basically like crypto Twitter on LeoFinance, and then Project Blank is going to be like Twitter, like it's going to be the full scale platform where everything is short form content, and structured a little bit differently, but very similarly.
Yeah, not to beat a dead horse or anything, but the emphasis on Hive with long form content, I think, is just so, what's a nice way to say it? Stupid. I don't know. Just
archaic.
archaic.
So what is it? So last century?
Yeah, I mean, long form content has its place, but it's not the majority by any stretch.
It does have its place, but it's not the majority for sure. And it's also something that is expiring as time goes on, because we grew up with blogging as the norm.
Right. 20 years ago.
Exactly. And we enjoy it to an extent. Even like, honestly, even like a lot of long form blogs, I'm just like checking bullet points and that's about it. Right.
Mm-hmm.
So think about, think about basically people that are Cal's age and younger. They didn't really grow up with long form blogging.
Yep. 7 seconds.
I had a live journal back in the day. Yeah. So I think the sooner we can get to a short form content being viable, the better. So I'm
Agreed.
Yeah, I think
Yes.
we're going to see Threads a lot sooner than later. It's becoming a focus now that we've got Leo Mobile V1. That's something else we didn't cover, is that Leo Mobile V1 is live for Android.
Come on, Apple Store.
Yeah, it works.
Now we're
it
just
finally
waiting.
works for me.
That's good. That's good. Yeah, so now we're just waiting for iOS to approve the Apple version. But I'm very happy that we've got V1 out for Android. It's a huge step.
Absolutely. I'm assuming that the Apple version is going to be pretty much identical to the most recent test flight version.
Yeah, so test flight actually, I think test flight has V1 out in test flight, but it's not V1 in the full app store. I'd have to check. I'm pretty sure though.
Yeah, I mean, so like the test flight version that I use on my phone, it works great. So I'm looking forward to that. And then if threads are built into that, it's like now you've got something cooking where
Yep.
people can quickly interact with obviously for the LeoFinance specific portion, it'll be crypto related
Yeah.
specifically, but eventually it'll open up into Project Blank and being general purpose.
Yeah, I think this direction with Leo Mobile is huge for LeoFinance. So we're talking about monthly active users and growing them to 2,500 and beyond. And expecting, because right now the monthly active users are counted as anyone who makes at least one post or one comment on either LeoFinance.io or Leo Mobile. So if you imagine that threads take off and we see this whole new way to basically create content and curate content on LeoFinance, which is, you may just want to post some short form tweets as if the same way you use crypto Twitter. And you can do it from Leo Mobile. You can sign in with with Twitter on Leo Mobile in 30 seconds and then create your first thread. And it takes you, 10 seconds. You could even just copy paste it from Twitter. And then, someone might come in and upvote your thread, which is essentially just a comment. So they can upvote your comment and you earn the same way as a post. That really changes the game, because you could imagine us onboarding 1,000 people to Leo Mobile and they start creating threads. Now we just added 1,000. We just actually tripled our monthly active users essentially. So I'm really excited to see this is all part of the roadmap that's kind of like coinciding at this critical moment. So I'm very excited about community pages too, which has a big role to play in that.
Yeah, I mean, those things have to get built out, so to speak. Amongst all the new projects being built, you still need to get momentum with the things that do get launched. Communities can be huge for sure. So Neil, are you wondering what I'm wondering?
When?
I mean,
No.
when is always the question. But,
Not when. Surprisingly, not when. I've given up on the whens. I know better. No, if Cal low-key gave away the official name for Project Blank, because I don't know about you, I think Threads is literally should be the name.
that's a pretty good name.
I think Threads is money, and that's not something I've really seen out there used. I mean, I'm sure someone's using it some way, shape, or form, but I think Threads is a badass name for a short form social media.
I like it.
Maybe.
I mean, you could obviously call it Leo Threads, but I think you might just be better off calling it Threads.
Leo Threads sounds like our apparel company.
Leo Threads does sound like an apparel company. That's why I think Threads alone is, I think Threads is actually a badass name for a social media app.
Yeah, it's a cool name.
In fact, let me go see if I can buy the domain.
Yeah, undercut me and then sell it to me for $1 million.
Exactly. But like, how much is it worth to you? The funny part is, legit, I know a dude from real estate investing, like he'll be in, calls, like, group calls or whatever. And like things like this will pop up and he will legit not even hesitate to go and scoop up the domains for any idea that like is like loosely joked around about.
Yeah. Yeah, I like it. I hadn't even thought about that, Kat, but that's good that you pointed out. So
I think it's a great name.
But you got to cryptofy it, so you got to spell it with a Z.
I don't even know if you have to. I think you just have to do, a .io.
Maybe.
But yeah, Threads with a Z, I guess makes it cooler.
I don't know.
I don't know.
I
feel
don't know
like
if that's still a thing or not.
that could be a poll. I feel like just threads with an S somehow is still cool.
Yeah, it's definitely usable in a sentence. So I was like, oh, did you check out the thread? Yeah.
Exactly. I just posted a thread. Hit up my
Already
thread.
in usage. All right. The council has spoken. Yeah.
Listen, occasionally I have some kind of great idea. And it's usually with names. Would be the first thing that I help name in the
The
Leo
creative
universe.
cat. The creative cat.
There you go. I'm gonna start.
Start a
We'll start
marketing
ch-
company. Call it Scaredy Cat Creative.
What I'm gonna do is I'm just gonna keep my mouth shut, go buy domains, trademark things, and then pitch the idea. Like I got everything you need already, and I can hook you up for a small service fee.
There you go.
Like Neil says, you got to organize and collect.
It's the collect that's actually the most important part.
Right.
It's the collect part that I really fail at. I really got to stop failing at the collect part.
Yeah.
But
You know,
anyhow,
I have a post back from a while ago about how, you know, the vast majority of charity is stupid. And the reason being is that if you can't make a business out of it, it's not sustainable. So it's same thing. You know, you got to collect in order to sustain your ability to organize in the future.
100%.
So, anywho, has the market cratered while we've been talking, or haven't been watching?
I think we're up half a percent.
Hey, we got a little relief rally going.
Bitcoin's mooning. It's almost at 23K.
I expected actually today not to be ugly, at least while the stock market was open. Stocks are actually slightly positive. I didn't have the balls to post it in chat last night, but I was going to say I'd be very surprised if the market was down any substantial amount. Like basically, I felt like open to close will be flat to positive-ish.
Yeah. Well, you know, it's anytime you have a big move, there's going to be some bounce.
Well, I mean, we
way.
just, yeah. And I mean, we had basically big red candle, gap down, big red candle, gap down, big red candle. That is so effing rare. And then if you look at Bitcoin right now, I mean, technically, let's just say hypothetically, the candle closed right here. We got a classic bullish U-turn and it's time to get long. I don't know if I'm that positive on it, but I'm not going to lie. If this candle closes green, I might take a gamble on a trade. But I don't know if we're actually going to get a relief bounce back up to, let's say, 28K or something. That would be.
I'm not looking at 28. I'm looking at 24.
You're
24,
definitely not
25.
looking at a daily chart for that.
No, I'm not looking at the hourly. 24.
Oh, I see. I see that little bounce we got last night.
Yeah.
Yeah, no, if that daily bullish reversal plays out and it's actually going to be a trade, I think I'm looking more so for that 28, like 300 area. But that would be a legit bounce. I don't know if we're going to get a legit. It really depends on what the market does. We think about tomorrow. We might usually stock market goes up on Fed days. It's like everyone's, it's the reverse, buy the rumor, sell the news. Right now, it's like everyone's selling the rumor.
Well, the everything was catalyzed by the inflation report last week. So, I mean, it could very well be that if the Fed comes in with whatever the market expectations are, the new revised market expectations, we could see some positive movement out of that, even if it's a bad report. But yeah, who knows? Stuff's volatile, So I was noticing that I was looking at the Bitcoin charts over the weekend. I was like, this hourly chart, just in the shape of it and the ranges, to me it looks like a weekly chart, just because it's so much movement, and it's just there's just crazy volatility in the crypto world. And we were saying 4-hour candle inverse flag, don't buy yet. Yeah. I'm just riding my liquidity pools, and we'll see. I'm looking to accumulate.
I'm just doing long-term buys right now.
Yeah.
So Like I
I
said,
have a number in mind for how much Bitcoin I want, and I don't have that number yet.
I actually don't have a number for the amount of Bitcoin I want. I just have a number of, all right, I have this many dollars to use. How am I going to break that up between buys and potential buys? Because, I might not see some of the levels that I'd like to buy at. So I bought a little at 22.5. I'm hoping I can buy a 20. Boz said 1. Well,
Yeah, I
I
think
still have my
one
forever,
Bitcoin.
I still have my forever coin. So I got my 1.
Yeah, got to be a whole coiner.
But at this
Is-
point, it's just like, hypothetically, in the next bull market, if Bitcoin goes to 100K, I'm like, well, how much Bitcoin should I actually be holding for that to actually like feel like I've made it? And it's like, well, what I have right now is not close to enough.
Yeah. The other way I like to look at it to keep that long-term perspective in mind is like, okay, everybody talks about the $1 million Bitcoin, right? And I think someday that will happen, whether it's through Bitcoin appreciation or dollar depreciation, or some combination. It's I think we'll see that at some point. So it's like, okay, let's say that's true at that future date. How much Bitcoin do I want? And it's obviously the more the better. But I definitely want at least a chunk.
Well, shit, if it's going to hit 1 million, having 1 Bitcoin is probably sufficient.
Well, the question is,
Right.
what will 1 million buy at that point?
Well, yeah, exactly.
Maybe a gallon of gas.
Maybe. So the IRS raised the mileage rates for July through December from 58.5 cents to 62.5 cents because of the price of gas rose so much
Nice.
for mileage reimbursement rates.
Got to remember to book them miles on my stuff this year.
Yep. So that's a big jump, in the history of mileage stuff. It's not even common that they will do a mid-year adjustment. It's happened a few times, but it's not common. And yeah, it's just there's one more sign that inflation is getting out of control here.
It is. It is. All right, cool. So I feel like we definitely, because I was going to ask earlier, but then we fell into it, got a Leo universe update, all things Leo. I don't know
Yep.
if there's anything else outlying, Cal, in regards to the LeoVerse, or if it sounds like you covered it all.
Yeah, I would in the most immediate future, I would keep an eye on what's happening on Polycub with a couple of things that we're releasing. I'd say that's most immediate.
Awesome. That will be my final point in the recap post. I'm gonna dip off in a few minutes. I got a 1:30 webinar to jump on.
Yeah, I think we covered everything pretty well.
Yep. So if stuff's volatile, keep on building, keep on stacking,
Yeah, stack
keep
units.
long-term perspective.
Stack some
That
units.
pretty much does it. Get units. I like it.
Sounds like a real estate investing term. Get units, acquire more units.
Absolutely. All right. Well, let's
All right.
call it here then. And
Yeah,
we'll see everybody next week on the 21st.
Yep.
Yeah, we'll see what price
21st.
Bitcoin is.
Oh, we should take bets.
Oh yeah.
Okay.
So let's say over under on 20.
Go for it, Cat.
I don't know. A week's a short time frame.
It's crypto though.
Because
I'm gonna say over.
Yeah. I
I'm gonna
might
say
say
over.
over. I mean, I think under is going to happen, but within the next week, screw it. I'll be aggressive. I'll go under.
Yeah, Wu says over, but we'll touch 18 between.
Yeah.
Oh, well, that could
I
happen.
agree with Wu.
Yeah.
I like that. I hope it does. Cat wants to buy at 18.
Yeah, I got some limit orders in. We'll see.
All right.
Resiliency is taking under.
I'll be
Alrighty.
dumping the recap post in the chat in about 60 seconds.
Sounds good.
All right. We'll catch you guys next week then.
All right. Yep. See you guys. Thanks,
All right, guys,
everybody.
be good.